Any advice and information from this podcast is general only. It has been prepared without taking into account your individual circumstances and needs. Before acting on any advice from this podcast, you should assess and seek advice on whether it is appropriate for your needs, financial situation, and investment objectives.
Hey guys, welcome back to Not Another Finance Podcast.
Not another one. Is this episode 3?
Episode 3 of Series 2.
How have we not been sacked after the last several?
I don't know how we've gotten away with it.
Is that because are we number 3,472 on Spotify's listen list?
Sounds about right, yep.
Ooh, here we come.
Watch out, we're coming up.
Here we come.
So this one is carrying on from our investment chats where we had a look at more of the traditional investment options in episode 2.
Yes, we did too. What was that, like shares, real estate, savings accounts, bonds? Okay, as in James Bond. Anyway, yep, cool.
Another joke in there. But
okay.
This time we're going to talk about alternative investments?
Alternative investments. So your other ones, okay, the ones that aren't. So, well, some of them are quite mainstream, but I guess when we look at traditional or other alternatives, these ones are kind of not as well known, and provide different types of volatility return, and they come in all shapes and sizes, which we'll kind of go through. And by all means, same thing with our disclosure. The whole general, don't take any of this. Take some of this as a grain of salt, but by all means, we are not telling you to buy heaps or not buy any, but just giving you a bit of a heads up and a bit of exposure on what these are, just in case Google hasn't answered it for you. Are you saying we could answer more than Google?
Oh, that's a big call.
Bring it. Okay, maybe not. Lucky we don't have like a hotline like on radio stations, but like, phone in, make a phone call, ask us any question, we'll be able to answer it.
Google.
All right, so alternative investments. Jessie, before we go on, we're on the investment topic. Are we still asking the question why? No.
Why?
Why? I mean, why don't I just, there's a heap of investments out there. We talked about the ones on our last episode for this one's. For these alternative investments, what are they going to give me that real estate or shares or a savings account aren't going to give me? Is this just another money grab from fund managers or other platforms just to get me to put some money in? Or
that's a great question.
Is snake oil part of this other or alternative investment?
Oh, yeah, we'll put it in there. Why not? Right, snake oil. Who knows how that's going?
Okay, cool.
I guess it depends on your situation, if you're looking for short-term or long-term returns. But they're a bit different for each one, so maybe we'll jump into the first one, shall we?
All right, we can. Shoot.
So the first one is crowdfunding.
Crowdfunding? That's not crowd surfing, is it? No.
No.
Okay. No. Okay. Yeah, crowdfunding, or also known as sort of peer-to-peer. Look, it doesn't have to be like GoFundMe or anything. That's not really an investment type, but it's an option to sort of raise funds. But there is an option out there for peer-to-peer lending platforms. They've definitely come to prominence in the last sort of several years. Essentially, it's kind of cutting out the middleman. Sometimes certain individuals might not be able to borrow some money from a bank just due to their financial situation, their income. The banks might go, hey, sorry, bud, we're not going to lend you money. You're a bit too high risk. You might be like an 18-year-old who's struggling to get some cash together and wants to go out and buy a flash new Commodore or I don't know what 18-year-olds buy these days, but the banks won't sort of touch you with a 10-foot pole, but you can essentially go through like peer-to-peer lending platforms, which are kind of like a digital middleman. And that also lets investors put money in those platforms as well and lend out to those people. Usually they come with a little bit more risk, but the reward is you might get a higher interest rate than, say, Commonwealth or a NAB savings account that's offering 4 or 5%. Some of these peer-to-peer lending platforms might give you the option to lend your money out to someone whoever that is, that's up to the platform to decipher at a higher interest rate. And the same rules apply. The higher the interest rate when you're lending money, the more risk you might be willing to take on.
Yep.
There's a few of them out there. We won't sort of spruik any names. I have dabbled in it. It is an option out there. But look, if you're looking for ultimate security, then a bank and a savings account's your option. But these peer-to-peer platforms do offer a little bit of a point of difference, and they sort of cut out that bank who's turning down someone trying to borrow money, and they let you as an investor go, oh, I might put some money in there, I might get an extra 2%. That's especially relevant if everyone winds back the clock 2.5 years or so, when interest rates were rock bottom, a lot of like retirees and stuff were flat out getting 2% on their savings accounts. Some of them would have turned to these peer-to-peer platforms to go, well, hold on, I could possibly lend out my money very similar to a bank. I could put 10,000 in as an example and receive 4 or 5%. The platform would essentially get your 10 grand, source someone who wants to borrow money, Jim, Bill, Homer, Marge, and issue to them at like 4 or 5%. And that's sort of how those platforms work.
Yeah, right.
But they're an alternative, yes. They're another type of investment, yes. One that's definitely sort of come up, I dare say you've probably had some clients, and I definitely have asked about, and we've sort of gone slightly down the rabbit hole during appointments regarding, you want a drum roll or me? I wish. Cryptocurrency. Now, when we talk about volatility, cryptocurrency definitely sort of, if you look at the Oxford Dictionary, I think it's right next to volatility. It's got in their brackets, cryptocurrency and day trading.
Bravo, that's a good one.
Yeah, give or take. So this is definitely, look, we are definitely not experts at cryptocurrency. Full disclosure, I do have some in cryptocurrency. I'm not sure about JMac. I'm sure it's in there somewhere as she's finally sort of nettled down to like an hour a week of work. But it is definitely an alternative type of investment.
Yes, we get this question all the time.
So you'd call it an investment, wouldn't you? Why would you call it an investment? How does cryptocurrency fit into all this?
Well, I guess initially, it is kind of a currency, which kind of cuts out the middleman, being the banks and government and all that type of thing.
Decentralized, yep.
Decentralized.
It's one of those
blockchain,
key sort of words that are out there. Okay, yep.
But you can invest in, say, Bitcoin or Ethereum, and
okay, so they're a type of cryptocurrency. Yep.
Like anything, companies, the volatility or the price of it goes up and down.
Ooh. And
you do kind of see, like you said, a lot of volatility in cryptocurrency.
Yep.
It hasn't been around for that long. When did it start, Yannick?
Well, I think Bitcoin, I think it came to prominence or in the market.
Like 5-6 years ago?
No, keep going. No way. It was like 2007, 2009 or 10 when it was in its very, very, very infancy. And then it kind of had its periods of exploding. So I think, Bitcoin was sort of created by, I don't think anyone physically knows who he is, but I think his name was, are you going to say it or should I say it?
No, you say it way better.
Do I have to say it in the Japanese accent?
Yeah.
Satoshi Nakamoto. Pretty sure. So that was sort of the creator, inventor of Bitcoin and the blockchain. I think 2009, many moons ago, I think wherever it started, people started sort of trading it, especially on sort of like the dark web kind of side of things. And, people were buying pizzas for 20 Bitcoin, and then you've had these years of just crazy volatility and growth. Wasn't really worth much when it was created, but definitely it came to, international sort of prominence. I think maybe in 15, 16 or 17, I was working with a few sort of tech guys, and it was all over the news, and that's where you were getting a lot of these instant millionaires, a lot of these young kids or something that had a like a digital wallet with some cryptocurrency or Bitcoin. They might have had 10, and next thing you know, like Bitcoin was worth thousands of dollars. They might have bought it for, or they might have attained it for like 10 cents per Bitcoin, and then it just exploded.
Damn.
But look, I don't know heaps on it, but the big ones that I guess drew people to maybe investing in it, it's definitely worth, I think, in the trillions now, I'm pretty sure. But it's decentralized. There are heaps of cryptocurrencies out there now. There's all your meme coins, cryptocurrencies, multiple releases. Bitcoin's the big one. I think off the top of my head, Ethereum is a close second in regards to like total value. I think XRP or Ripple is probably third. You can essentially set up digital wallets, buy and sell these in various trading platforms. They have a value for money. So, I think Bitcoin at the moment might be trading at, 85,000 US, maybe 100 and something Australian. Don't quote me. Very volatile, whether that's intraday, interday. But, some people, and this is, as we mentioned before, this is not to say don't go out and buy it. Some people buy and hold, to the moon, all that kind of stuff. Some people trade intraday, and because of the volatility, they do pretty well. I've definitely met some clients that bought at a good time, and because of the sheer volatility of it, have experienced exponential capital growth on it. Some other things with cryptocurrencies, not just Bitcoin, but the other ones, different from like your real estate or shares, they're not really paying you like a dividend or that, it's essentially you're making value on the capital growth of that asset. So you're buying it at $1, hoping that it goes to $2 or $10 and you're selling it. Same rules apply. You're going to pay some tax on the capital gains, but there's plenty of information out there regarding cryptocurrency, and that sort of goes down the rabbit hole of cryptocurrencies, blockchains, NFTs or non-fungible tokens were a massive hype a few years ago where you could sort of buy digital art using cryptocurrencies. You have a look at all those, the values sort of ebbed and flowed, but a lot of it's sort of fallen through the floor at the moment. Dogecoin, everyone remembers that from a little while ago. You can have your big whales out there, whether it's Elon Musk or whoever, sort of pumping in hundreds of millions of dollars, and that explodes the price, and then they're just dumping it, selling it off, and that just crashes the value of it. So there's they're definitely out there, and they're definitely a type of alternative. There's a heap of wallets out there. You can, similar to if you want to buy shares, you can set up like a trading account or go through a fund manager. Same thing with cryptocurrency. You can set up, there are various platforms out there you can sign up to, deposit your money in, and off you go. You're buying and selling cryptocurrencies on a trading exchange or platform.
Yeah, right.
Is cryptocurrency how you bought your fourth Tesla? Is that correct?
No Teslas here, no.
Righto.
What do you find? Why are people investing in say Bitcoin or Ethereum? What's their kind of goal in doing that, you reckon?
Well, I guess that there's a psychology behind it. I'm looking at a different perspective, say, compared to like an 18, 20, 25-year-old. As I sort of mentioned, when cryptocurrencies, or especially Bitcoin, exploded several years ago, you could have had teenagers or young 20s, people that just had a heap in their wallet, digital wallet, wasn't worth much. And next thing you know, this thing has just hit the mainstream media and market and exploded. And overnight, or within a week, internationally, you had thousands of millionaires that were just created just like that, just from randomly holding, they, they sold a Game Boy on a certain web platform for 100 Bitcoin that was worth 50 cents each. Next minute, they've forgotten about it on some hard drive, and then the news has exploded, and now that Bitcoin might be worth $10,000 per unit, and they're like, oh my God, I'm rich. Yeah. I won't say the last bit. That's, so there's crazy volatility in there. You literally can turn your fortunes overnight or during a month, but it runs on a very different kind of premise or psychology to, say, trading shares, sort of, but it's gotten that big now, especially with like your bigger cryptocurrencies. Like I mentioned the three before, like your Bitcoin and Ethereum, which are big players now in the international markets, where you've got massive fund managers and banks and super funds all holding these assets now. So as much as people years ago, you had like leading economists and experienced fund managers, even Warren Buffett, I think, was like, nope, not touching it. There are some fund managers out there that hold several $100 million worth of, or even billion, in these cryptocurrencies, and as they grew in value, it's sort of turned into that, hey, too big to fail kind of thing. But They're definitely out there. The cryptocurrency market is worth a fair bit now, and people can make money off it.
I find it very interesting that there's kind of this mindset with shares that, they're very risky.
Yeah.
But with cryptocurrency, I think there's a lot of good media or a lot of talk, and people are very excited about maybe investing in cryptocurrency, maybe because, there's a lot of media about it'll get you rich overnight or that type of thing. I just thought that was very interesting.
Media and what it portrays out to the public is a story for another day, I think. 100%. But by all means, as we sort of, and many episodes we sort of outline that we're kind of lucky we get to meet hundreds of clients from all shapes and sizes, walks from the earth. That might be worth $1,000, and we're meeting millionaire clients, and some of them do and some of them don't hold crypto, and some of them have done really well. And some of them have said that similar thing, like they might not have any shares. I think shares might be a bit too risky or whatever, but yet they might hold some Bitcoin or some crypto and they've done really well from it.
Yeah.
So by all means, it's changed the game in that platform. Similar. Yeah, it's the same sort of premise. You can buy this alternative type of asset compared to, say, real estate, where you've got to come up with a big deposit, borrow money from a bank who's going to charge you interest, whereas crypto, you can just jump online. You could potentially, especially when we talk about volatility, you could buy $1,000 of a crypto today and it could be worth $5,000 tomorrow. Like if anyone's out there Googling, you can jump on some of the trade platforms and just have a look at the volatility and the intraday percentage change. Like Jessie in our last episode sort of talked about Tesla in a day on the US markets taking a 5% hit. Multiply that by 10 or 20 or even more with some of these cryptocurrencies. Dogecoin was one. I think that just went through the roof. So.
Yeah, I guess we're saying, it can go crazy overnight. It can also go down crazy overnight. Yeah.
Come back to your why.
Yes.
Why did you buy it? Are you willing to ride out that heart-stopping moment of volatility?
Can your heart handle it?
Oh, my God. My mate at that barbecue just told me, oh, dude, dump your 10 grand of savings and buy Bitcoin today because tomorrow or next week could be worth 50 grand. And you do that and next thing you know,
yeah.
Like next thing you know, you're looking, your 10 grand and literally a day or a week has just plummeted down to $1,000. You're just like me. Next minute you're in the bath, cold shower, scrubbing your teeth, kind of like a scene from Ace Ventura when he finds out that remember Ace Ventura?
Oh, I don't think.
When he finds out that Finkel is Einhorn, Einhorn is Finkel, and he's like, it's the same kind of moment. That's what we're talking about, volatility. People are like, oh, yep, I'm sweet. I'll be able to handle it. But when you're looking at your trading account and that asset is just plummeted.
Oh, that's a true test,
then
isn't it?
That is a true test, and you will then come back to your, why did I buy this? Am I willing? Do I have to sell now? Do I need to? So there's a fair bit to it, but it's definitely an option out there, and that is definitely an alternative type of asset.
It's kind of similar to our philosophy we'll probably go into in one of the next episodes with shares or investment properties or anything, diversifying your portfolio. So, maybe the core of your investments are in something stable long-term. Yeah,
a bit more traditional. Yep, fair enough. That show proven sort of long-term results, provide some income, provide some growth. Yes, there's volatility, but and then I guess you could have maybe smaller allocations. But, as we said, there have been some overnight millionaires through crypto. So, hey, give us
Are you one, Yannick?
Oh, well, it says you're asking me, the guy who does 8 days a week while you do half a day a week. So, look, if any of our listeners out there, by all means, shoot us an email or a text. I'm just going to make up that we have some sort of hotline. But leave us a comment and, love to sort of hear from you regarding if you were one of those overnight successes, by all means. And then I might come see you for some financial advice. No, not really. Going on to the alternative side, talk to me. Look, it's definitely raised with some clients. Can I go out there and buy a slab of gold as an investment?
Sounds fun.
Yep. Have you got any clients that have held commodities, like whether it's silver, gold, in some sort of deposit somewhere?
I do have a lot of clients ask me this, which I think is very interesting because I think there's that mindset that gold's stable and it might be a good long-term investment.
Oh, okay.
I did some quick stats, as I do.
You and your numbers, you love it.
Sorry. Just looking at gold, performance or return over the last 5 years.
Yep.
It's done about 84% roughly, or about 17% in returns a year.
Damn, savings account hasn't given me that much.
Yeah. I guess it's contributed a lot to COVID as well because, when COVID happened, everyone, like that heart-stopping moment, they saw their funds going down, maybe sold their shares.
I remember. A
bought
sea
gold.
of red.
Yeah.
Yep.
But I compared it to like the market. So I had a look at the Dow Jones and it actually did 117% in returns the last 5 years.
Okay, but gold, that's still a pretty solid performance you're saying. So the last 5 years, gold, which is a commodity you can look, I don't think you can literally go to the corner store and buy a slab of gold, or maybe on the black market, but I guess there's online platforms there. There's some sort of deposit managers that you can buy a lump of or an ounce of gold or whatever. And I know I see gold prices when you watch the news or the finance news, they're like, oh, gold was up 0.2%. And I'm like, yeah, okay, cool. So that's a type of commodity, isn't it?
Yeah.
Okay, so that's an alternative asset. All right. So comparing that, it's very different. You're buying from a deposit, whether it's Australia or overseas, and you can buy a slab of gold. Okay, but it doesn't pay you like an income or a dividend, does it?
No.
All right. Okay, so you're just holding this asset in the hope in the long term, or whenever you want to sell it, you're going to make some profit from it.
Yeah, I believe so. Or it might be the doomsday people that,
Yep.
all technology is down and we're trading gold bars. I don't know.
Right. I've warned my kids, even though they're not that old, if they've got gold teeth and we're broke, I'll tell you what, I'm fishing that tooth out. Yeah.
Watch out, kids.
Some child services person is going to listen to the podcast, find out where I live and come bust around and put me in flexi cuffs and a hood.
At least they'll get some hopefully good financial advice out of it.
Yeah, I'll offer them dodgy advice if they can let me go. Anyway, okay, so yeah, that's interesting about the gold thing and what you mentioned with COVID, and that's same thing. Definitely met some people that are happy to hold that gold or commodity asset. You can I'm pretty sure you can jump online through your investing platforms and you can buy these commodities. There's various deposits around Australia. Reputable companies that are out there you can buy at a certain price and they will hold the physical asset for you. So no, I don't think if you jump online, buy an ounce of gold that you're gonna have it rock up a week later in an Amazon bag going, here's your gold sir that you bought. But interesting, and I guess you just ride the wave of, as you mentioned, the last 5 years as an average, it's done 17% a year. It's not to say it does that every year, but it's definitely grown in. Yeah, and there's no doubt, surely there's down periods to gold. Like there would have been periods where it's dropped in value or price.
Yeah.
Yep.
Well, it's actually interesting because the last 5 years, we've had COVID.
Yep.
And, the market still outperformed gold as a commodity, even though, everything that's happening at the moment, you're seeing on the media that the share, the S&P's down. But, I think it's an interesting comparison. It really depends where your risk tolerance lies.
Yeah, okay. It's an interesting one. Okay, so that's the type of investment. And I guess we talk into so there's the commodity side, whether it's like silver or gold. And then, you could even, I guess diamonds are an earth mineral. Are they then an alternative? They're sort of, so there's definitely people you can buy diamonds. There are managers or I guess asset managers out there that buy and sell diamonds and jewelry sort of types. You can buy those rare earth stones, have them held in a deposit on your behalf, but you are the owner of those. So
we can't wear it? No?
Well, I don't. Is it the same as gold? If you buy online, you get the little Amazon.
You get jewelry delivered to your door?
Yeah. Only time I think of diamonds is just Leonardo DiCaprio with his Rhodesian accent in Blood Diamond, the movie.
Oh, of course.
And he's talking about the pinky, yeah. Anyway, cool. Okay, so, diamonds is a type of alternative asset. And I guess we then dip into further down the line is the other things like, I've known people to buy stamps, people buy art. I've got no idea on art. I'm flat out drawing stick figures, but
same.
But there is definitely value in art. If you're a holder of certain pieces of art, they can grow in value. They might not be able to. Well, now I think about it, I think there are small companies out there that let you borrow or they lease out art if you're holding an event or if you're doing something, they'll lease it out. But there is definitely value in some art out there. I'd hate to think what the Mona Lisa is worth now, or some rare works that are still around from Leonardo or all the rest of them. Stamps, we talked about that there's some that are still like your rare stamps that are worth a bit. People buy and sell cars. Some old classic cars are rarer than hen's teeth now, so they've got their value. They might have been bought 30 years ago. They've kept them in pristine condition. Next minute, there is a buyer out there who's willing to pay hundreds of thousands of dollars for your last remaining
hen's teeth.
Yes.
Sorry.
That is a real commodity.
Yeah.
I'm going to charge you for that financial advice. Anyone out there, if you find a set of hen's teeth, give us a call. I'll buy it off you, and then
I like you to slip that one in there, hen's teeth. Yeah.
So, I've even discussed with clients. They've sort of found that they got an email spam from certain companies selling whiskey barrels. As much as I love whiskey, you can now have the option to invest in various whiskey companies. They'll essentially sell you barrels and spruik the value of this rare whiskey, is it's growing at 10% a year, or they'll offer you a return. So there's a heap of other options out there outside of traditional investments that you can dabble in.
Who knew? So many.
Yep, and that wasn't available maybe 10, 20 years ago. The interweb has opened up all these options, but it's also a double-edged sort of weapon where a lot of them are reaching out to you now. You get the spam on your emails, in your junk box, on your text, on your phone. We're like, hey, we sell this product. You should buy it. You'll make a mozza. Next minute, they might issue that email out to hundreds of thousands of people. It only takes one to bite back on that email and go, oh, I'll buy some diamonds from South Africa or wherever. So that, there are other options out there, yes, outside the traditional platforms, but we just want to highlight that they're out there. You could turn $1 or make a small fortune, or maybe not. But consider that they are definitely out there. So I guess, Jessie, how do I know if these alternative investments are right for me compared to, say, the traditional ones you talked about? Why?
So I think it goes back to our first episode. First out, figuring out your goal, and then we can backtrack from there, kind of figuring out what your risk adversity or risk mindset may be.
Okay, and that's that volatility thing. Can I handle – I love the idea of buying some cryptocurrency on the potential premise that I will be rich tomorrow or next week. But is that what you're sort of mentioning? Does it fit into my goal? Can I handle the fact that it might plummet tomorrow?
Yeah.
Right.
Do I want to invest $1,000 and, it goes up 1,000%? Maybe you have a couple of $100,000 sitting there. Is it your goal that you just want to get rich overnight, or what do you want from that couple of $100,000?
You pumped out that stat about the gold thing. Last 5 years, 84% over 5 years. It's done 17% a year. Surely if I buy a slab of gold now, it's just going to keep climbing. Is that how it kind of works? Is that?
Yeah, you could buy the gold, and, depends what your goals are in the long term. Do you want something defensive like a savings account, or something more growth like gold, or even more like meeting the market, say index fund or managed fund or something like that?
Is this kind of like a horses for courses kind of thing?
Yeah.
Yeah, different. Okay, it's not one size fits all. Not one investment type will fit everyone, because it's both their goals, their why, their psychology. We've definitely met clients that like the idea of, I'd love to be earning 8% a year on average. I'm happy with that. But are you happy with waking up in the morning and reading the news that the markets have taken a 10 or 20% hit? What are you thinking then? Are you going to get cold sweats, jump into the ice bath, or are you willing to ride that out because your why and your goals are like, hey, I'm not worried about today. I'm worried about 5 years from now.
Guess like everything, a nice balance, hey? Peace of mind while also not working so hard.
Right. Well, now that we covered sort of like the alternative assets, traditional assets, maybe our next episode might be covering off on a few of these things you raised. See you then, J Mac.
Thanks, guys.
Ciao. We'll see you then.